Hello and welcome. I hope that you are having a fantastic day. Today, we're going to talk about my cryptocurrency algorithm trading. And I'm going to kind of go through with you the journey I went on to get where I'm at today with my algorithm. So that journey took me through a pain of a 70% loss. And then I made a discovery that gave me a direction for writing the software algorithm. And then it gives me, I'm going to share with you 3 algorithm trading ideas. And so let's get right into it. Can we get 99 likes on this video? If you like what I share with you today, smash that like button. It really helps us out, and we need some help with this channel and getting people aware of what we're offering. So I'm not a financial advisor. This is not financial advice. This is my opinion. Now, the pain came in right here. And so I first really learned and got serious about cryptocurrency trading right around here, which is August 9th of 2018 to August 16th, 2018. And my wife and I watched a program, and that program piqued our interest. We made an investment in a information packet about cryptocurrency, and that information gave us enough confidence that we actually invested in 35 different cryptocurrencies. And so from here to about the middle or late October, we invested in a total of 35 different cryptocurrencies. And you can see from when we first learned about crypto, it was trading around 6,600 as a high or 5,900 as a low. And it went all the way up to 7,300 and then had a little bit of a dip and then continued to trade sideways, trading in the $6,200 to $6,600 range while we were investing in these 35 different cryptocurrencies. Once we got fully invested, it wasn't but a few weeks later here on November 11th where it just took a dive. And it went from, here we see cryptocurrency trading at about, the close price on this particular candle was $6,486, and it dropped all the way down to a low of $3,191. And so that was a very dramatic drop for us. Bitcoin alone lost 50% of its value, but my portfolio lost more than that, and we were down more than 70% at this point in time. And so having just invested in it, that was a pretty serious drop. And it was very difficult for me to say, blankety blank this, I'm getting out of cryptocurrency. I'm just going to eat the loss, sell what I got, and stay away from it forever. But I had already made the mistake during this period of time of doing a lot of research and learning a lot more about cryptocurrency. And before this drop ever happened, I already knew that Bitcoin has a tendency to drop by 50% or by 70%. But I also saw that many times it still recovered. If you go back in history, in 2017, when Bitcoin hit its $20,000 high, there were many times where Bitcoin had, on its journey from around $1,000 all the way up to the $20,000, there were many times where it had very dramatic drops in the price and then recovered on its path to hit that all-time high of $20,000. Well, because I had learned enough about it, I decided to stick with it. But I also realized, you know what? I don't like this 70% drop. I need to figure out something better. And so here's what I did. I'm a computer programmer. I've been doing that for 20 years. I've worked on some very high-profile projects. I've worked on a project that had over 200 consultants. I was one of the 200. I've also worked on projects for pharmaceutical companies. I worked on projects for the state of Oregon. I worked on projects for Duke University. So I've worked on some high-profile projects with Fortune 50 corporations and governmental organizations. And so as a result, I've learned a lot about programming. And I decided to apply my programming skills to create an algorithm. But before I wrote the algorithm, I actually had kind of an aha moment. I made a discovery. Let me share you my discovery. If you've been watching my channel, you will have seen this chart a number of different times. I have a tendency to use this chart a lot when I create a cryptocurrency investing for beginners video. And the reason why I show this is when you're investing in Bitcoin or any other cryptocurrency, you have to have a different mindset. A lot of people think in terms of, oh, I want to get in, I want to get a profit, and I want to get right back out. They're trying to think in terms of doing day trading, or they're thinking in terms of doing buying and holding for a few days or maybe a week or two. And what I noticed is that with Bitcoin, if you buy it and hold it for 3 years, you tend to make a lot of money. In fact, if you just take $1,000 and buy Bitcoin and hold it for 3 years, this is the money you would make. So if you bought it on January 1, 2017 and held it until December 31st, 2019, you would have, that $1,000 would be worth $7,206. And you can see here we hit 43,000, we hit 32,000, we hit 60,000. The biggest 3-year period actually returned $2.6 million. And the worst was this year from January 1, 2014 to December 31st, 2016, where the $1,000 at the end of that time was only worth $1,180. But wait, that's an 18% return. I talked to a friend of mine and he was really excited about getting a 6% return on an investment that he was doing where he was able to help provide funds that real estate investors were using. And so it's kind of like a GoFundMe thing, but it was a GoFundMe thing for real estate investors. And so he put money into a pot, and there were a whole bunch of other people that put money into that pot. And then that pot of money went to a real estate investor who fixed the house, flipped the house, and then repaid the investment. And he was excited about getting 6%. Well, 6% is Bitcoin's worst 3-year period. I mean, 6% over 3 years is about 18%. And this is the worst 3-year period. And so what I discovered was the only way I could lose money is if I didn't at least buy and hold for 3 years. If I had bought and held for a shorter period of time, I ended up losing money. And so I wrote my computer algorithm not really to do day trading, but rather to hold for a longer period of time. And I wrote the algorithm in a way that it was going to go back 365 days. Initially, I tried it to do 3 years because I really thought this 3-year thing was important. But the more I worked with the algorithm, the more I realized that 3 years was just too long because you had swings during some of these years that didn't happen in later years that was changing the way my algorithm performed. And so I found that the 1-year mark is really more the sweet spot. And so I wrote the algorithm so that it goes back 1 year and it does a back test. And what a back test means is that it tries it takes a particular set of values and it tries to trade using those parameters over a 1-year period. And then it captures how much profit or loss it made. And then it tries a different set of parameters, and it keeps going, trying all these different ones and always remembering which one was the most profitable until it's tried 3,000 different parameters. And then it remembers which one was the most profitable one, and it records that profit strategy along with the parameters or the values it used in order to run its algorithm. Anyway, kind of a complex thing, but the bottom line is here's kind of how it works. With each different, now my algorithm runs against about 80 different cryptocurrencies. I'm going to share with you right now 3 different ideas that my algorithm has recently come up with and the results that my algorithm came up with. And so this column here is what would the profit be or loss, because there is a loss in some situations, if we took $10,000 and bought that cryptocurrency and just held it for the entire 365-day period. Because one thing I wanted to know is, would I be better off just buying and holding it, or would I be better off trading my algorithm? And so this column is After we've gone through those 3,000 different tests and we've figured out the best parameters to run the algorithm with, how much profit did it make with that set of parameters? And that's what this column shows us. And so in this case with RLC, which is a cryptocurrency, it's Ripple Credit Network, we can see that the profit was $49,814. But if we had bought and held it, it would have been $21,000. And so the $21,000 in 1 year from $10,000 initial investment, that initial investment had a 2x increase. But here we see that the strategy produced almost a 5x increase. I mean, we're only $186 shy of seeing a 5x increase to $50,000 from an initial investment of $10,000. And remember, all these numbers are recorded from a 1 year back test. So it only traded it for 1 year, 365 days exactly. And so the next one that we looked at is BCH, and it produced $43,000. And if you just simply bought and hold, you would have had $26,000. And then this final one is Bitcoin, and you can see that it shows $23,000 versus $24,000. And so it showed a $1,000 loss, but that $1,000 loss is so close to the buy and hold profit that I think I'm still interested in the strategy, and I'll show you why in just a second. So I'm going to show you a couple of charts here. This chart, let's zoom out to the 1 year. So this is 1 year of buying and holding, and this chart is the RLC chart. And you can see the blue dots on this chart represent the exit price that my strategy would use. And you can see by the blue dots, so the parts where there are no blue dots, there's no blue dots right through this part of the chart. That's when my strategy would have exited completely out of RLC and would not own, it would own 0 RLC when you don't see a blue dot. And when you do see a blue dot, that's when it would take that entire $10,000 investment or whatever its current value is, and it would buy RLC. So it bought RLC back here. It held RLC up until this particular candle, and then it sold it, and RLC dropped a lot. And during this period, it was not invested at all. And then when this blue dot shows up, it took all of the profit and the current value of the portfolio and invested in RLC right here at this blue dot and held it until it peaked at this candle, and then sold it all and got back into RLC with 100% of its funds at this point. And so that's how it came to a $49,000 profit, but we were able to compare it to if we had just bought here at this candle and held it all the way through all those ups and downs, and then looked at what the value was at the last candle. And so, you know, if you were going to do that, you had some pretty major losses, because here we hit a high of 91 cents and dropped down to a low, that looks like the lowest candle. So the low was 18 cents. So you went from 91 cents all the way down to 18 cents. That's an 82% loss on your money. And that, just emotionally, that's hard to deal with. And having the algorithm say, hey, look, get out of this thing during this period of time is a good thing, because then I don't risk any of the capital that we had made during this increase. And we got out. The algorithm really got us out at an extremely, the perfect time, the perfect timing in this particular 365-day chart. Now, another thing that I want you to notice that you don't know yet, but you'll see as we look at some of the other charts, notice how close these blue dots are to each of the candlesticks. And that's because during this period of time, the most profitable parameters for RLC have us extremely tight to the price of RLC. Most of the time, these blue dots, there's a much larger gap between the blue dot and the candlestick. And what caused the blue dots to get so close to the candlestick is the back testing that I mentioned. I mentioned earlier that we test 3,000 different sets of parameters. Well, it found that with RLC, the most profitable way to trade RLC is when your exit strategy is very, very tight and very, very close to the actual price of RLC. And in the other examples we'll look at, we'll see that the blue dots are a lot farther away from the candlestick, that the exit price is much greater. There's a much greater difference between the exit prices and the close prices of each candle. And that's because with that particular crypto, the algorithm found that the most profitable was to give a lot more breathing room to the crypto. So here's BCH, and BCH is a great example of what I was just describing. You can see how far the blue dots are from each of these candles. In fact, you notice it doesn't touch the candle until these last 3 candlesticks. In fact, this one is barely, it's just on the edge of touching it. So you might even say, well, it really only touched the candlestick on the last 2. And notice how the algorithm got us out of RLC, and especially during this long period of time where RLC was in a downward trend. And so the algorithm has proven that it can fairly well determine whether or not we're in a long-term uptrend or a long-term downtrend. And that's one of the reasons why the algorithm is being so much more profitable than just buying and holding, because when you're in the uptrends, it's going to take a profit. It'll sell out 100% and hold those funds until it sees a signal to enter back into a trade, and then it will continue to hold the trade until it gets to a point where it's got a sell signal. And so far what we've noticed, this chart, we really need to zoom in onto the 3-month to see the actual play. If we zoom back here, we can see even though on the 1-year chart, it looked like it was a continuous buy and hold, but it actually does have some periods where it got out of that algorithm, or out of that, it sold off its position in RLC and had zero trade. And so it actually took, here's one trade, here's another trade, here's a third trade, here's a fourth trade, here's a fifth trade. And so with RLC during the year, it made 6 or 7 or 8 or 10 different trades. I haven't actually gone through and counted, but it got in and out of RLC multiple times. Whereas with BCH, even if we zoom in, let me hit the 3-month and then scroll back here. We can see that with BCH, it's so far away. It was actually in prior to February 20th, but we only backtest 365 days, and it held it all the way here until July. And so it held it for a good 5 or 6 months. And then it got out. It did one quick trade and got out, and then it was out of which one am I looking at? Sorry about that. Out of BCH. It got completely out of BCH until December 27th and did not re-enter BCH until December 27th. So you can see that with this set of parameters, it basically traded twice during the entire year. Whereas with RLC, it traded multiple times during the entire year. And so it just depends on what the algorithm determines is the most profitable way to trade that specific cryptocurrency. And that's why I like the chart, because it helps me identify, okay, what is the algorithm actually going to do in the coming months for this particular cryptocurrency, because we can see what the algorithm determined through the back testing. The last one I'm going to show you here is Bitcoin. And you can see again with Bitcoin, it does one trade and then it does a second trade. And so with Bitcoin, the algorithm found that the most profitable settings at this time, and I say at this time because when we're not in a trade, so from this point to this point, we were not in a trade. And so during that period of time, the algorithm is going out and trying to find the most profitable parameters on a daily basis. But once it enters a trade, then it locks it down and it keeps that set of parameters until we exit. And the reason why we do that is because when we're in the middle of this uptrend, if we let the algorithm change the parameters once we've entered into a trade, I found that it was actually less profitable. It literally hurt the profitability of the algorithm, because all of a sudden in the middle here, it found that a different set of parameters that were more profitable, but that was only if we had entered at a different time. And because we entered with this one set of parameters, by doing that kind of switching back and forth, it ended up being less profitable. So bottom line was, I found that once we entered a trade, we're going to keep the parameters the same. And then when we're out of a trade, we're going to look for the most profitable one until we get an enter signal. And then we enter the trade and we keep that set of parameters until it's time to exit it. So anyway, I've told you a lot about how my algorithm works. How can I be of service to you? Does this interest you at all? Are you interested in this algorithm? Please leave a comment below. And if I find that there's enough people interested in what I'm building for my own personal use, I'll consider sharing it in a more public way where you would be able to trade using the algorithm. But if I don't hear from you, I'm not going to do it. I need to know that there's enough interest, because for me to build out something for you to be able to use my algorithm is going to cost me money and it's going to cost me time. And I need to know that there's enough interest in people that would be profitable for everybody involved. And so how can I be of service to you? Leave comments below, especially if you're interested in more information about my algorithm. In the meantime, I hope that you'll like, subscribe, and hodl. Have a fantastic day.